Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, May 12th. We are looking at Window Trader's market profile of SPY IWMN triple Qs. We talk about price vacuums. Boy, do we have a price vacuum again today. We only ended 8 wide, so I like 9 wide or more. We had decent excess on the highs, but I don't think that's going to last. We have the day's high and low on over a $10 range, almost $11 range on 120 million already. I've been talking about this earlier this week. 4 days we've made consecutive yearly lows. Not once were we able to hold trend down. It's something you can't ignore. It's been a very orderly sell-off, even though we almost got $100 off the yearly high. It's been very orderly. There's been no panic selling. Shorts got ripped apart. They tried an IJK and got ripped apart in L&M. Now, I'm facetiously saying the low for the year is in. And the reason I'm saying that is prior to the end of last year, we had everybody in my trading room say what the high for SPY would be in 2022, the low, and where it would close. Well, right now I'm closest to the low. I said the low in SPY would be 388. The next lowest is 382. So as long as we stayed above 385, which we did by 15 cents, I've got it. So I'm going to say the low is in for the year. Now, I also said when we were down here that if we don't hold single prints or get single prints, I wouldn't doubt if we get a $15 vicious rally at some point. Well, guess what? We got over $7 in L&M. I didn't take advantage of it either. I didn't take one trade, actually. But I had a great day on one huge trade we'll go over. But that is something I'm still looking for. We did have excess, but I'm not really counting that to hold to tomorrow. We should get major chop inside of today's range. Unless we gap higher or lower, I think we're going to get major chop inside of it before we get our direction again. But I do think, because this market is so fragile and fickle, these players, that if we do take out today's high at some point, we are going to get more of a vicious short covering because the destinations are really all over the place. I had a very good day. I took a short twice in A period against the gap the first time. 390 puts that worked out. Now, B period. I took a short against the opening when it was below it, when it came back up. Not a big one. I wanted to see if we were going to hold the opening. But then what I did was, when we got close to A's high, and it looked like, so I had a 15 put play, the 390s. I was getting hurt. But it looked like it wanted to pop. It kept backing off A's high. I bought 100 of the 393 calls, in the money calls. And it just ripped above A and ripped higher. So, I mean, I took the put play off and ran with those calls and had just that's a touchdown play on those 100 calls. I took longs in D, 392 calls, on not chasing it, but on any pullback, I was buying small. Again, in E period, even though we took out D's low, I took twice against yesterday's low and above A's high, and both times worked out as it pushed back up of the 390s. Once we started getting extension and didn't raise POC from A's high to D's low, that call play went out the window. And then I shorted G period against yesterday's low, which turned out to be a nice short as it came back in. I shorted G period twice with 395 puts, and I shorted K period against the one-time framing down, 383 puts. Now, I did tell the room, please be careful. If we can't go trend, Russell, we took out both sides of the IB. Russell only took out the high. Q's did take out the low, but got nothing for it. And I said to the room, look, Q's got nothing for it. Russell couldn't do it. We're trying and getting nothing for it. If we take out K's high, be careful. Again, I don't mind leading the room and not taking the trade, because, boy, was I dead right. If you were short in L, you better have had a stop above K's high, because they just mauled, absolutely mauled the shorts. As far as destinations, the upside, We only have today's high of 395.80. So we're $3.50 from today's high. And our downside, I'm sorry, let's finish the upside. 398.16 is the afternoon rally high from yesterday, K's high, and then nothing to 404.04. So you're talking about a market that has an opportunity to really rip either way because of these price voids and vacuums. And then on the downside, now I'm not going to ignore an 8-wide POC, but I want 9 or more. Our first real downside destination, of course, there'll be value high and low. It's today's low of 385.15. $7.50 away from it. So expect, unless this market, three things can happen. We can gap higher and rip apart some shorts because the shorts are getting nervous. We can gap lower again because nothing's changed in the big picture. All this rip was some short covering. Or we could open up inside of today's range, get some massive chop before finally deciding, do we go get the high finally to come into balance or go make new lows? The one I see more likely to occur is to open up inside of today's range. But again, it all depends on what happened. Again, that's why I go home flat. If I had any conviction, I'd say, okay, these shorts are going to get ripped apart. I'm going home long. Or nothing changed. I'm going to go home short. But why would I do that? No real reason to do that. And then on the chart, just going to show you the daily because nothing can change in the monthly or weekly until the daily changes. We're one time framing down 6 days. The market is clearly still down. As great as that vicious short rally was, all it was shorts from earlier today. Where change can take place finally is if we start to take out today's high and start to get some legs up to these 3 daily highs. Excuse me. Thanks for the likes and subscribing. Hope you had a good day trading. Enjoy your evening. And we'll speak prior to the opening tomorrow.